is this was the level that we called on Wednesday, 1885, so it's there now. So yeah, we were talking about this in my Telegram group last night because somebody put a long on gold. I was like, well, just remember some simple things when it comes to trading. Just remember, it's bearish when it's bearish. It's bullish when it's bullish. As for the rest of it, that in terms of confluences, indicators, everything else, strategy, yeah, that's great. But first and foremost, people ask you which way is it going to go. Well, just look at which way it's going. Immediately, people try and get a bit clever and they think, right, it's going down. Quick, let's try and buy it. And it's like, okay, so you're trying to catch a falling knife. You're trying to catch the bottom, and there's no need. Yes. Now, if it was a beautiful woman, and I'm looking at a top and a bottom, quick, the wife's not here, she's gone out. No, I'm kidding. Don't be sexist. Yeah, I don't know what's going to happen with NFP today. I think we are pointing down on gold, we're pointing up with the stock markets. They keep making record highs. Gold in this kind of environment can do all sorts. I remember, if you recall, December, it was very choppy. It was moving quite aggressively, and we had 200 to 300 pip swings up and down. If you take a look back at the non-farm payroll last month. Yeah, I mean, I tried to trade it as well, funny enough, and it just wasn't giving me anything. I was like, well, this is it. Yeah, that first week of December was a complete write-off. So. Oh. Yeah. Yeah. Give it a few minutes after the news and see. Why is that doing that now? Trying to get on here and it's. Yeah. Yeah, exactly. Precisely. Who's in the money? I'll just follow you, Martin. If you're in the money, we'll just go where you're going. Excellent. Yeah, I wasn't supposed to start until next week, Monday. I just had a little look to see what was going on. This week's been quite nice, really. It's been moving quite well and things have been happening. I've got a long position on the Dow Jones right now from a bit earlier, and it's just made a little impulsive move up about 10 minutes ago, and it's just pulled back to 137. So I just missed that. Actually, I should have added another little position there. But yeah, I'm just long, and I'm just looking for a little bit of a push back up because it's bullish. I'll just add one there. There we go. So it's not the best entry, but there we go. Let's put a little position here, and all frickin' day. Oh. It's gonna give you a little bit of a pop to the upside if all goes well with no nonsense. In terms of how long that lasts, how long it goes for, I don't know, but we'll see. But welcome everyone. Let's see what non-farm has to provide. Let's see if we can make some monies. So let's read the messages. Hi, thanks for the invite. Sacred words. I say a lot of sacred words, mixed in with a fair amount of bullshit and waffle. So, enlighten me. What were the sacred words? I might have to write them down and use them again if they're that impactful. It's like, oh yeah, they like that. We'll use that again. The Messiah has spoken. It's like that. Yeah, that's it. What works, and just keep using it. Isn't that how it works? Isn't that how the world works, society and everything else? I've got stop loss in profit and taken 50%. That's really nice. Where did you get in? And where's your stop loss for gold? That's really good. Glad I just took it after what you guys said. What, taking some profit or taking it short or just taking it short now from 89? Will you be saying any trades to place after NFP? Young Jakey's very enthusiastic, that one. Whoa, yes, we might do. Yeah, don't mind. I'm thinking, gold has made a move at 8 o'clock. So London opened and then gold just dumped. Now we haven't had that sort of a move on gold, not for a long time at that particular time of the day. So they are moving it deliberately. There is a lot of attention now being drawn. So those blue lights you get in takeaways or restaurants in the kitchen, attracting the flies. That's what they do, isn't it? It's manipulation. So gold has made a move, or they've moved gold 8 o'clock, and now everybody throughout Europe and the European session, and coming off the back of the Asian session, will be looking at gold. And I've had already multiple messages all throughout the day. I haven't even been here, asking me, send me a signal for gold and things like that. It's quite funny. So you can see, people are looking at gold. It's the same with Bitcoin. Bitcoin, I think it was Chris that said yesterday, where was everyone trading Bitcoin last March or last year, when it was at 6,000? It goes to 40,000, everyone's like, oh yeah, let's trade it, or it starts breaking 20,000, and so that's what happens, isn't it? My watch list for today is the euro dollar and the pound dollar, because if you notice the dollar pairs, they've been trying to go up, quite bullish. Pound yen has been quite good, but pound dollar's not actually moved. The dollar pairs have been a bit stuck. So if you keep looking at the dollar index for reference, there's a few things happening with that in terms of making some lively movement. Yesterday, it had a decent move up, didn't it, yesterday? So we have 10 minutes to non-farm, and then hopefully we're going to see what happens. So watch list is pound dollar, euro dollar. Euro dollar is always really decent for trading the non-farm payroll, because it's not aggressive, but it can move enough to generate a few pips, like 20-30 pips. So let's pull up the euro dollar now, and for me it's always about going short on a euro dollar, generally with the news. So it's quite bullish. It has been bullish over the last few weeks, and then yesterday into today, if you look at your daily charts, it's had a bit of a bearish move, hasn't it? So, about picking tops and bottoms and determining a trend. Yeah, okay, so yes, that's right, human nature it is. So with regard to tops and bottoms, we have the divergent strategy. So that's why, if you recall, on Monday, we used our divergent strategy to pick the top. This is the pound dollar. I explained it in full detail yesterday. I posted the video as well. So you could see what we did. It was like a trade recap, and I was actually looking for some trades short on pound dollar yesterday, but the volume just wasn't there, and you can see it's stalled a bit. But we'll see what it does today. So yeah, the divergence strategy came into play because we have all this divergence, and it went up to, it extended past the 100%. It went up to the 127.2 of this last major swing. If I zoom right out, you'll see what I mean by that. So that was calling the top. That's how you call the top. Same principle if you want to call the bottom. But yeah, so we have a strategy for that. So we have 3 strategies, and basically you can link them all together and you can create like a hybrid strategy, which is what I talk about. And what they aim to do is they aim to take you from the very start of a move, so using divergence to see where things are overextended. So like with the pound, overextended up here, so you expect it to pull back. So that gets you into the trade to start shorting at the top. So that's the start. And then you have the MT strategy, which is the momentum, which often when the market is rallying, when it's moving like this, basically it goes down, it does pullbacks each time, doesn't it? It breathes in, breathes out. When it breathes in, you use your fibs and you look at which fib retracement it goes up to, or pulls back to in this case. And then you short it again and you keep doing that and it keeps going down and down and down, or you keep adjusting your stop loss, trailing your stop loss, tacking it in behind the last swing high or swing low. And that's a trending market, isn't it? So it goes down a bit, pulls back, and it gives you another chance to get in and short it again. So that's momentum. And then you have the 764, which helps you with the markets when they're kind of range bound, or when they're consolidating like they're doing right now, and they have done for the last day or two. So pound dollar, we had, if I zoom in again, we had that first impulsive move, divergence, then we had a 764 pullback. So that allowed me to get in again on Wednesday, and we shorted it again. The pullbacks to 136.60, and I did share that. So we're looking for that sort of price action today on gold. Gold might actually retest that low. Let's have a look what you guys are saying. I was long on pound CAD, closed 50%, and moved to stop loss to break even. Oh, that's nice. That's good, isn't it? Are you in Canada? Yeah. Well, we have Canadian news, don't we, as well? Canadian news as well. So we'll look at the dollar CAD, see if that does anything. Dollar CAD correlates quite nicely with the stock markets. So if the stock markets go up, dollar CAD tends to pump down. We do tend to see that sort of correlation. Yeah, so make sure the stops are on here. Okay. Oh yeah, I was going to show you. I was going to show you that 764 again, just to recap, really. I think I did it on 15-minute or 1 hour. I think I did it on the I think I've taken it off now and adjusted it because I was looking at the current price action. Let's have a look at it on a don't mind all the charts and all the colours. You might need to get yourself some sunglasses. Yeah, you're in Toronto. Yeah, I say that because anyone who trades pound CAD or Canadian pairs generally are Canadian bias, so makes sense, doesn't it? It's like me, I trade pound pairs. It just seems to be one of those pairs that I trade. So look at this, right? This is if I get these fibs and look at this first impulsive move. This was a divergent strategy kicking in up here. So we had this first move down, and then it stopped and started consolidating and pulling back. So what you would do here is you'd get your fibs and you'd plot them like that. And by doing so, you can monitor and measure the pullback. So we had the first prominent measure, prominent pullback at 38.2, and it reacted off there. So you make some money there. It did it again, reacted off there 2 times. So a little double top there. Then the third time, you wouldn't go short because anything that tests 3 times, you want to be looking for, for how it's going to react for the third time. Third time's a charm. It's like with any support or resistance, like a trend line, you look for 3 tests. So 2 tests, 2 touches to give you the heads up, to make you aware that this is actually support and it is being used. And then the third time, it'll either break it or fail, and then for sure, then generally it's going to go in the other direction. Generally, sometimes it will go and do another 4th test just to annoy you, but generally you start looking at something being tested 3 times. You're basically saying if a certain level is being tested and rejected 3 times and it hasn't broken on the 3rd attempt, how many times are you supposed to allow it to keep testing? So that's a little bit of common sense, isn't it? It's you're basically looking at a level being tested, and it's like, well, if it keeps hitting it, it's like slamming into a wall, and that wall won't break, then you sort of then say to yourself, okay, this is a relevant level. Let's see if it breaks, we'll go short. If it, or if it breaks long, we'll go long, and that's then how you can get into a trade. And the good thing about that is that you can tuck your stop in just behind. It doesn't need to be a big stop because you're hypothesizing. Your whole thinking of that trade and your trade plan that you're formulating is based on that bit of support or resistance. And so if it breaks it, then you're assuming that it's going to break it and go, move in the direction that you want it to, and you'll take the position. And so then you put a small stop just behind and maybe move it up to break even, and then if it moves at a decent amount, then you maybe take some profit off and leave a bit on to run and see what you can get out of it. And that's pretty much what trading is. A game of testing probabilities and testing support and resistance. And so you see here, you see the way the price broke this 38, went up to the 50 and the 61.8, then we had a double top, came off there, then it went to the 7.6. That's the last area, last level that I've got, a key level, before finally breaking and giving it all back on the Wednesday. So Tuesday consolidation, Wednesday a move. So I was looking for lower still. I'm looking for a sell-off. I'm still looking for down, and I'm looking for 135 institutional round number, 135 area. I've got 76.4 of this bigger range at 134.94, and based on the divergent strategy, my previous structure is 134.83. So from about 134, round it up to 134.85 to 135. It's about a 15 pip zone. If pound dollar does show any weakness today, if we see any dollar strength today, that's what I'd be looking for that short, which I've been touting that, I've been saying it, I've been sharing it, I've been giving you the reasons why. We've been talking about it. So we've basically planned our trade, and if it starts to happen, then we'll know what we're looking for, and we can devise, how we're going to trade it, how we're going to execute it. So these strategies are just there to give you the vehicle in which to trade. And yeah. Okay, so let's close this up a little bit. Right, we're getting there. So a minute to go, and you can start seeing volatility. Oh, we're having a bit of a nudge down now on the Dow Jones. Okay. And a bit of a spike up on gold. And we've got about, it's all going to kick off in a little bit. It's like watching fireworks. It's quite funny to watch. So allow it to play out and see what happens for the first, first few minutes. Let's just see how it plays out. First few minutes. Okay, there's a gap down, and is that nudging? Yeah, it's nudging. Okay, gapping down, and then is it going to go back up? Gold is spiking up. Is that just going to go up in a straight line? Okay, let's see. Alright, so pound, euro, euro dollar. I'm going to take a short on euro dollar at 40. Let's get on that. There you go, 40. And I'll put a tight stop on it as well at 40, what are we saying, 55. See if we can get something out of it. Just a 15 pip stop. Short on the euro dollar, nice and calm. Just see if that helps. What did I get in at? I got in at 42. There you go, 42, 41.9. I'm just looking for like a little scalp, maybe take it down to about, I don't know, 20 or so. That'd be good, wouldn't it? Do you know, I haven't even looked at the figures. I'm just thinking, like, let this do whatever it needs to do. And alright, good. We're having a bit of a nudge down on pound as well. Let's see, pound dollar. Yeah, okay. La 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 la. I'm still long on the Dow from here. I'm long on the Dow from 31,100 as well. I had one just above, but it just made a little move down, so I closed it. But I'm long on the Dow Jones with a tight stop just at 90. Let's check, make sure that's, yeah, it's with the spread. Let's allow for that. Yeah, 90. Let's make that 80. There we go, 80. On what's that? 30, 80, 85. There we go, 30.85. It's a nice tight stop. 30.85. 39.85. Don't worry about the Dow. You don't have to trade the stock markets or anything like that. But I'm looking at, what have I just short? Oh, it's just shot up, isn't it? I've just shorted euro dollar. I think we were up like, I don't know, about 5-6 pips, and it's just flicked back up. So that's a bit dead. Just have to be patient, I guess. I'm looking for it to curl back over. Maybe get down to about 122.20 area. Yeah, retest the previous low, maybe. Oh, I've just been taken out of that. I've just been taken out of the Dow, 15 pips. Anyone doing anything exciting? What have you guys got on? Gold now, VL didn't really do a lot of movement today. So okay, yeah. It's alright. So I'm short, and I should be looking at pound as well. So look at pound dollar, because I did want to see it maybe give us something to the downside. And I've been waiting all week for it to do that, and it has made a little stab to the downside. Let's see if it does continue. I know euro dollar just looked a bit better today with it being some bearish momentum. Now if it breaks 55 and starts going up, then that's fine. We'll just stand aside and just wait. Gold's trying to have another little nudge to the downside, isn't it? You think that's going to go? It's trying. That's kind of stuck at the minute in a bit of a weird little range. So that's done what it needs to do. So yeah, just focusing on euro dollar. Nothing major. I don't think I'm going to get anything out of this market today off this move. So if it hits my stop, I'm short on euro dollar. Short on euro dollar at about 42, and it's set at 47. I got to stop at 55 because that's what it spiked up to before dropping. So yeah, just like to see something like a euro dollar make a bit of a clean move and not chop around too much. But we'll allow it. Oh, got a nice quick. Let's get something off there. Beautiful, beautiful. That's all good. Yeah. Excellent, sir. I took tiny position on the Dow because I was trying to leave it to maybe do a little bit of a run Maybe grab like 100 pips or something off it if it was to do it, but it hasn't. It's just done a little stab down and retested previous structure. Maybe now it's going to go up, and yeah, maybe now it's going to do it. But I'm only left now in. I took some gold earlier to the downside. I'm only in this euro dollar. Yeah, look at that Dow Jones making that nice spike. Do you know what you see with trading like this? It's all about timing. Trading, a lot of the time, it is about timing, isn't it? How many times have you taken a trade and then it might have gone and stopped you out, and then it goes into profit? It does what you thought it would do, and you're like, ah, that's annoying. This is what they mean by patience, patience. It's best not to sit and stare at a chart or screens. And don't look at the 1 minute chart unless you're trading it. It's not something you want to look at because it's just noise, and it just, goes up a bit, down a bit. And if you can't keep your emotions in check, it's exhausting. Okay, so we've stabbed down on gold, and we're at about 79.3. We're testing the 76.4 as we speak of this range, where it's completing the N shape. So it's cold, round and down. Okay, the euro's done nothing. It's basically it has given about 20 pips on that move from 55 to 35. I think that's about as good as it's going to get, really. That's disappointing. Oh, well, I was kind of hoping we were going to get a bit of a decent, a retest of the low at least. Will it just test my stop and miss it by 1 pip or something and then drop? We've had that a few times this week, which is quite nice. The divergent strategy we took on the pound dollar this week, we put a stop at 137.05. The high was 137.04. But you see, with stuff like this, I don't get too excited. I certainly don't try and put too much of a risk on these trades when it's just noisy and news related. I was actually looking for a bit lower, but it looks like it's not going to do it, and this was just a little pullback, which is a little bit disappointing.
For the cards and things for the plants.
I'm just on the thing. I'll come back to you in a minute. Yeah, can I just doing that? Yeah, no worries, Mum. I'll come in there in a bit. Let's have a look. Yeah, so that's just hit my stop. Euro dollar's just stopped me out. So I made something on gold, and I've given it back. That's pretty dead. And I tried to take a long on the Dow. Yeah.
Yeah, I was just going to say that a lot of euro dollar traders are short from 22.17
Oh yeah.
4-hour candle. It might be going up to take them out, I think.
Yeah, well that's okay. I was looking for a proper pullback. It did give a pullback, very tiny, but you'd have to be in at the very top of the move, in the 50s, and for it to drop to about 35, it gave us about five or so pips, and that was about as good as it got. And now it's bounced and continued long, so that's dead. Do you know, I haven't had many trades. That's the first time I've traded the euro dollar this week or this year, and it's probably the last time I'll be trading it. To be fair, I'm not a fan of it. Yeah, it's a bit dead. I only trade it with these numbers because I expect it to, do something exciting. It's the most liquid. Yeah, it's the most liquid. Yeah.
That's where they take the most money out of the market. traders that were short the 122.72.
Yeah, we're getting a rally. Euro, all the Euro pairs are starting to push up now. They're having a bit of a. Thought this would happen today. I was long on euro dollar before NFP touch stop loss. That's good.
They're all short mega miners, so they're pushing them.
That's good. Yeah. So pound pairs are trying to put in a bit of a pump to the upside. Euro pairs are putting a bit of a pump to the upside. They're all showing bullish potential. We did get the long that I was looking for on the Dow, or starting to develop here on the Dow. Let's see if it can break now. And I might take that long. We'll see. So I made a nice little bit earlier on gold, shorting it, and then just gave it back on the Dow and on the Euro. So that's that.
I'll just close all those trades in the short term.
Has anyone have you had a good week generally? I mean, I made, where are we at the moment? I'm up about 1.5% on the week, just from a bit of trading that we did, shorting pound dollar a couple of times, and got, yeah, okay. So we're long again. We're long again on the Dow, and we're holding something from this initial move down. It stopped me out, but then I got in again. But I just put one position on just to see what we can do. And I'm just gonna scalp some of this movement.
Interesting if they drop this euro now.
You think? Yeah, maybe. Well, as I say, I'm long on the Dow, and just looking for a retest of maybe 31,200 at least. So we'll see what it does.
It's just about to take out the Asian highs.
Euro dollar, yeah. You like to trade the euro dollar, don't you? You,
Asian highs.
yeah. You like trading this, don't you? So.
Yeah, it's because it's the most manipulated, it's usually fairly easy to see where they're going to go, and that's usually where most people are in profit, they'll take them out.
Okay. Well, I want to revenge trade and get my money back. What do you reckon?
But if it breaks this Asian high, it's either going to consolidate and keep going.
Oh yeah, no, I'm just on the Dow, because that's just made a really nice move
Of
up.
course, yeah.
We're about 60 pips up, looking for that 100 pip move. Aussie. Oi, oi, oi. But this is trading, right? So we're being proactive. We're getting involved. We're taking trades. This is what the game is for anyone who's watching. We trade. We see stuff happening. There's a bit of volume. We've waited all day. I haven't done anything all day. I've barely even looked at anything, except for about 5:30 or so this morning when I got up, and that was it. And I came back about 12:30ish and thought, okay, let's see what's going on. We obviously had some alerts on. I saw that that gold had made a move, so we shorted it on the pullback. That's all really, nothing else. Okay, so this is struggling a bit. Got the Dow's struggling. Okay, that's fair enough. Let's see what it does here. So we've just tested 50% at 68. Okay, so let's tighten up the stop. See what kind of pullback we get right now, and then we'll put our stop in just behind this drop back. So we'll bring our stop up. We'll let this let these next few minutes play out. What's that, mate? Oh, the Dow. I was just looking at the Dow, just to see if we're going to get some, like, a little bit of a pullback. Is it going to just drop back down to 3100, or are we going to find some support here and go back up? Yeah, so just wait and see. I'll move my stop up in a minute.
You long already.
Sorry, I didn't hear you.
You're long.
Yeah, I'm long. I tried to go long earlier and it went down, and then I put a 15 pip stop on the Dow. You know it's not acceptable. You expect to get either it's going to be a sniper entry and it's going to just move straight up, or it's going to just take you out very quickly, which it did. So, but then I got back in when it did start to flick back up. So it's flicked back up nicely, and we've got a nice little move going on at the minute. But yeah, see if it can find some support. Testing previous low now, previous structure. If you start looking like on a 5-minute time frame or a 15-minute time frame, you see where it went up and it just broke this consolidating range that we've been in. And we've just had a sharp push back down, and we're just sitting on it now. So I just want to see what it does here. Is it just going to drop back, or is it going to find some support and go back up? Let me actually pull up. So I'm going to change this one. Yeah, I'm going to change this chart to the Dow Jones. Is there anything that you guys want to look at or want me to look at? Oh yeah, forget, if I do that it changes all of the charts. Yeah, so this is the Dow Jones. This is a 5-minute chart. So you see it's gone up and it's broken out of this range. It's either a breakout or a fake out. That's that's what you expect, right? That's what you expect to see. So with it doing this sort of a move, you want to see now if it is going to hold. And nowhere, man. I love that. I love your title. And you've got a picture of the Beatles. Is that Paul McCartney? That's pretty good. If you trade, I don't usually trade the dollar CAD, but the dollar CAD, the dollar pairs, dollar CAD and dollar yen, they spiked up, didn't they? And then they've gone down, and that's the kind of move. If you look at it on a 15-minute chart or 5-minute chart, those pairs, that's the move I was looking for on the euro dollar. Kind of a little bit of a spike up, and then just a bit of a sell-off, bit of a nudge down, makes the money job done. It didn't really do it. It did a tiny little push up to about 55, and then it got stuck at about 35, and that was it really. I don't. I think the next candle so is going to tell us if we're going to see if we're going to go up. So my last 5-minute candle on the Dow is currently green, despite it being a bearish candle. So that's just the software telling me that this still has bullish potential. And I'm just looking to see if we're going to go up and retest the previous high, or if we're going to break down here. So this will tell us maybe the next candle if we start seeing a bit of buying come in again or not. If not, then I'll bring the stop up and probably close it out for a bit of profit and wait. Bear with me. Okay. Gold has already done a move. Compared this to last month, we didn't have an 8 o'clock move like this. We didn't have, the sell-off down to the 38.2, which is at around 1885. Sure, it's stabbed down, but the body of the candles are what matters. If you look on a 4-hour candle or you look on a 1-hour candle, the wicks have gone down below the 38.2. But the body of the candle have closed above, and for me that makes a difference. So Aussie dollar channel 30-minute time frame. Yeah, what about it? Oh, up. Well, Aussie dollar's bullish because euro dollar's bullish and pound dollar's bullish. If you look at all those charts, they all look the same. They've all had a little bit of a pullback, and then they shot up. That's what they in actual fact did. Pull back with the news, and then they went. So I'm just going to see now what the Dow. What I'm focusing on here is the Dow. This level here where we're at, you can see it's just sideways. I was kind of hoping we were going to get a bit of commitment, but it looks like we're not going to get anything until 2:30. I'd still like to see this curl up though, to be fair, and keep some sort of a bullish bias. But struggling. Oh, that's just dead.
So you made a play on gold?
Yeah, shorted it earlier. When it went down and then it retraced up, we sold it again. Let me just close this out. So I'm taking a profit off that. That's dead. So dead. All right, let's get rid of that. Just up and down yo-yo price action with the news. Not exciting at all, really. That was the Dow. Just moved it out of the way. But yeah, you're asking me about gold. Do you want to take a look at gold? Do you want to have a little look? Should we see? No, I wasn't looking. Who asked the question about gold?
Oh, that was me. I was just curious what play you made on gold.
Oh, I went short with it. We shorted it on Wednesday as well. Took a nice short on it. I'm pulling it up now. Show you the levels I was looking at. So the six. Actually, I'll tell you what I can do. And pull this one up. It's clean. There we go. Gold. Let's put it up on. Let's put it on a daily. I did share this chart as well with the group, with all the groups, with my Telegram group. We've broken that trend line, which is interesting. Yeah, I can. Yeah, I was just looking at gold, at the Dow and the pound pairs. Just seeing, like Martin was saying, maybe it was just a little bit of a pump up, take out some people that are trying to go short. But yeah, this is, I don't know what you can see. Can you see that now? How's that? Is that a bit better? You may not be able to see the numbers too clear, but if you are trading, you may simply be able to pull up your own chart. You'll get the gist of it. The next level below here. Yeah. So yeah, this was a 38.2 retracement that we talked about on Monday, when price was going up, because price had gapped up. You don't see it on here too well, but let me show you on. Yeah, there's the gap. Let's show you on the 4 hour, right? I'm going to show you the 4 hour, and I'm going to show you the 1 hour. It's really simple stuff. Price action's been really clean, really easy, using those fib levels. It's just been working. Yeah, look, so that's gold, right? So we were bullish from Sunday night when the markets opened, right through to Monday and Tuesday, and I said, okay, bullish to 1956 to retest the previous high, double top, but also that is the 61.8 of that much bigger picture, much bigger range. You know that we had a gap as well. We had about a 60 pip gap, didn't we, around that 1900 level. for anyone who's been trading with us, I know Martin's been around with us like back in sort of October, November. Martin, are you there? Remember gold 1900 level? It kept going back to it. So it it might go to 1910, 1920 and then drop 200 pips back to it, or go to 1818 and go back to it. So it was just hovering around at 1900 level for a long time. Bearing in mind that 1921 was the historical high, record high on gold, going back to 2011. We went up to 1921 with gold, and then it fell from there. And everybody speculated back then that it was going to test 2000, but it didn't. And then it fell, and it's just been sitting down at 1100, 1200, 1100, consolidating for years down there. And it's only been the last year or two that we've actually had some, finally broke out of consolidation, curled up to complete a U shape, and then in actual fact broke that U shape. Same principle here. We've got this, we've got this level here, 1956 area, it's a 61.8 fib, a really prominent, really good clean swing high. You know why this dropped, right? This is back at the start of November. What was announced at the start of November? Fundamentals, relating to the fundamentals, it was the vaccine, wasn't it? It was the vaccine for COVID. So we had this 1500 pip move in that one day where we shorted it, and we shorted it conservatively down to 1900, because 1900, as you can see from this price action, 1900 was always a decent area to gravitate up and down to, and it was quite nice. We were doing all right out of gold actually. And so then it dropped, and we had this big old move, and then I said, okay, we've got further still to go, and then we took the trades, didn't we? Took those lovely levels at 1850, saying 1850's got to break, and I think we got in at just above that 1870. We got in on the Friday, holding over the weekend, thinking we may see it gap down or do something. It didn't. But then Monday afternoon at around 2 o'clock, 2:30, with the start of the US session, it sold off, and we had this big old move, and we were targeting 1800s as a first level. So now we've had this double. Yeah, that's right. Yeah, exactly. So further momentum, which is quite cool, really. So what now for gold? Well, if we explore this move, this current drop, this sell-off, this is what we talked about, 1885. Not because of these fibs. Forget all this range. This is interesting and relevant for if we find support and it starts going back up. Then we'll start looking for 2000 to the upside, 76.4, and that's a fundamental round number, $2,000. Nice round number. So we could easily, if gold, just bear it in mind, write that down. If gold rallies, or if it starts to rally, you start to see a rally develop maybe next week or whenever, or today, whatever. If you start to see any sort of rally on gold, then bear in mind your upside levels are going to be obviously the retest of this 1950 area, and then up to 2000. So you note that down and bear it in mind. And it could start today, now that we've had the 38.2 drop, and people are thinking, well, where's the 38.2? So let's have a look at the 38.2. That's the 4 hour, and what I've done is I've just looked at this range here. This is this current range that we're in. So this last low and this last high. Yeah, that's on the 4 hour chart. So this is a 4 hour chart. This high time frame relevant. Now I'll drill down to the 1 hour, because all I'm interested in is that current high low swing. So we'll pull that up there. We'll pull it up on here as well. That's what I've highlighted here as well. So on my trading view chart, I've highlighted this range that I'm talking about, because I put a trend line on there, and it was trending beautifully. And on Monday, we just bounced off that trend line, and we just spiked up, didn't we? We were rallying quite strong. So it needed to give something back, and it was quite nice what it gave back, really. It's been quite generous in giving back such an aggressive drop. The fact that it broke 8 o'clock this morning, the fact that it broke this trend, it's broken the uptrend. It's no longer bullish. According to this trend line, technically speaking, it's no longer bullish. It's fair to say, right? You've got to use support and resistance and say, well, is it bullish or bias? Well, it's bearish today. But bullish or bias? Bullish bias or bearish bias? It's bearish. So one of the guys in my group, Mr. G-Man Graham, he was trying to short it the other day when it was doing all of this bullish behaviour, trying to call the top on it. Then he's tried to take long on it. Tried to go long on it last night when it was dropping, like when it was here, and I was like, well, it's bearish. Sometimes you just have to keep your trading really simple. So you might have the right idea, but it might not be the right time for it to play out. And you can get so wrapped up in your analysis and get so excited about what you're seeing. And it's great to be 2 or 3 steps ahead of the market in terms of the play. But don't forget that. You are still 2 or 3 steps ahead. So allow it to catch up. And sometimes people forget that and they jump into the trade a bit too soon. And they don't allow it to finish the move that it's currently in. So of course they're going the opposite direction thinking it's going to turn. But they've not timed it. And they'll get stops out and then it turns. And that's what happens because you identify something, but you then don't have the patience and the discipline to kind of just sit there and say, well, let it breathe, let it do its thing, let it play out. Then when you see it doing what you want it to do, because there's that fear of missing out, the FOMO, isn't there? So you're scared, you think, oh, I'm going to miss it. I'm going to miss it, so I'm going to put a trade on, but I'm not going to account for the fact that I might be too early. So I'm going to still put a silly little stop on and risk all my bananas on this trade and my cookies and my livelihood and the house and the car and then it does what you want it to do, but it's already stopped you out and you've lost and you've got nothing left to play with and you're like and that's trading. that's trading. So you've got to be patient and wait. Now we've allowed it to go down. I shorted gold. I went with it. I'm bearing in mind that this might find some support and decide it wants to start rallying. Now it can look to start rallying because it's done what I wanted it to do this week. It's just done that. It's fulfilled that level today. And the level in question that I'm speaking about is the bearish level. So it was all very well having the short to 1900. That was a safer bet. And you've got to love gold for this. I mean, look at this move up from 1900. It pushed up and up and up and retraced and put in a double top and retested 1965. And imagine how many people were shorting gold, trying to get cocky, and their trade plan was telling them that they want it to come down and fill the gap, right? So great, you think it's going to fill the gap, but it didn't fill the gap when they wanted it to do it. It filled the gap once it stopped them out, or worse still, they got a margin call because they didn't put a stop in because they were adamant that it was going to drop, and they just left it to run and run and run, and the markets can stay, what's the term that they're saying? The markets can stay irrational longer than you can stay solvent. And that's what we're talking about. And so when people say patience and discipline, that's what we are talking about. We're referring to just chill out, just take it easy. Give yourself a 5-year plan, because then that will give you a better standing in terms of what you want to achieve out of this business, and treat it like a business and think from a business point of view. When you start up a business or a company, you don't think you're just going to pop up one day and I'm going to just do it for 6 months and then shut it all down. That's not your thinking, is it? Surely. It's thinking that you're going to be there, established for 20 years and then some. Maybe you haven't given it much thought because you've never thought to start your own business. But if you haven't, then all the more reason to start thinking like a business. As with any business, look at any institution, look at any long-standing traditional high street shop that's been there for like 100 years. Look at any organisations, public services, private sector, public sector, any institution, anything that's been around for 150 years, where you have staff, employees, and what they stand for, what they're about, how they operate, how they've survived for so long. Just look at the world as a whole in terms of the financial world. And just look at how things work and understand how economies work. That's what you need to sort of get your head round. It's not just a case of spending 80% of your life staring at a chart, trading. I've got to put trade on. Spend 20% doing that, 8% doing all the other stuff, all the back testing, all the research, all the other bits, self-development, learning to breathe, meditate, take it easy, build your skill set, discipline, have a trade journal, so that when you come to the table to take the trade, you're prepared. And just, the thinking, you get where I'm coming from. Your thinking has to just be a little bit grown up, I guess is the best way to describe it. You're not a puppy. You're not chasing anything that the market, because the market's the boss, right? Don't forget that. I'm the market, but I still have to answer to my board of directors, if you like. You know, I'm still governed. And so remember, we're not a puppy. If he's throwing you something, don't just go chasing it. Just question it, because you're not a puppy. You don't have to chase everything that just comes flying your way, and that's how you trade sometimes. And it's just weird because you'd say it yourself. It's like you don't behave like that in real life, surely. Are you that kind of person? You'd be knackered if you conducted your life in that way, running around chasing things and, you know, pandering to everything and everyone and never saying no to things and always being that yes man. You'd be knackered. So you have to, that's common sense. So a lot of, you know, you have to apply some of your common sense and way that you do things in your life, apply it to the way you trade as well, and you'll see that it's relevant. And the good thing is it will pay you back. So if you can learn about your own strengths and weaknesses, identify yourself, spend 80% of your time self-development. Who are you as a person? What do you want from your life? You know, what do you want to achieve? What do you have any answers to that? If not, go find out first. And then when you have an idea, then you can come to this cash machine and you can extract the money, you know, because it is then becomes your own ATM, personal ATM. Until that point, it's going to decline you every time you try and take some money out of the market. It's going to go, no, you're not qualified enough. Who are you? Who do you think you are? You know what I mean? You don't get a free pass with this. You might get lucky 1 or 2 times, but so it's just how you think and your attitude to risk and everything, and package it all up. Then you come here, you trade, you make your money every day, and and it will pay you dividends, because not only will you get paid, but it will teach you, the skill set that you're learning about the discipline, being patient, that will spill over into your personal life, and you become quite humble as a person. You could become quite a successful person in your own right, where you can maybe, I don't know, put yourself to better use, where, you know, you make some money trading, but then go and set up some personal projects and help your family and friends, and maybe set up a charitable organisation, foundation. You see all these billionaires setting up different bits and pieces. It's about karma. It's about, you know, it's about having that balance in your life, and it just makes you a better person. So that's where you get the payback. So you put in the work and you'll get so much more out of it. You won't just get your money, because if you're only thinking about money, then you are so far from being successful at this. Because what I've just explained to you, I didn't talk about money really. I talked about you as a person. You are your own worst enemy. Until you sort yourself out, you're not going to succeed at this game. And so that has to be addressed. That's the elephant in the room. You are the elephant in the room. You have to sort yourself out. We can help you with that. You only need a few things. A good go-get attitude, you know, willing to get up at the right time and be consistent in how you approach your day. Have a daily routine. Routine's important. Try and do the same thing every day. If you're risking 1% of your capital, make sure you stick to risking 1% every day. Just the things that you have to do. They're not hard, it's just whether you can be bothered. It just requires a little bit of discipline. The difficult part is that you have to govern yourself. No one's going to govern you, so that's quite hard, because if you've never told yourself what to do, then, you know, it's like going on a diet. All these people that are starting diets in January, I know people that were going to start a diet in January, detox and no alcohol, and they're like, well, I'm locked down at home, so that's all gone out the window. I'm going to eat what I want. I'll start it next month, you know, and like, I'm not getting any gym time. So you have to adapt and be able to adapt, be flexible. So hopefully what I've said, some of it you can take on board. I've recorded this session. I think we're done for today. I won't hang around for too long. I think what have we done? We've done about a good hour or so. It's more than enough, because if you want to watch some of this back and get some of what we've said back out of it, you know, you shouldn't have to sit for ages looking, scrolling through. It puts you right off, doesn't it? Because I can't be bothered to do this. If I can put stuff on a podcast, then I do. I try and I'm sharing my podcast with you all now as well, because I try and get some information to you. I'll do it for another year or so, 18 months at best. By July 2022, I'm done. I'm out of here. Not to say I'm not trading anymore, but I don't want to be sitting here sharing and caring about everyone else. I think I'll give back as much as I can over the next 12 to 18 months. So if you can take some lessons from it, and you can, master this game in that period of time, which you can, then great, great stuff. And I'm sure we'll keep in touch. When I'm sitting on a beach somewhere. Yeah. So let's just see. Last thing, gold 1885. That was the downside first target. We're still very bearish. We're still holding here. 20 minutes the market's open. Let's see what it wants to do in 20 minutes time. Gold will either make a new low and maybe try and test 1862 to the downside. So 1862 to the downside. Upside is, well, we have to kind of look at this current move. You see this range now? So I've drilled down from the 4 hour to the 1 hour. The 1 hour's taking this range into account. Now I'm going to look at this range, this current sell-off that we've had this week, this weekly sell-off. So let's drill down to maybe a 15-minute chart and explore that little range and just see where the potential is for it to go back up. Maybe let's do it on here on a 1 hour. Maybe see if we can do that. All right, yeah, there you go. So this will be easy. There's the fib. Let's take that high. Let's go down here, double bottom. So if it finds support here, where are we saying? 76 area. If it finds support around the 76 area, we will surely go back up and test previous structure. You can see that's where it's broken this morning. So we're looking at about 1900 again, 1908. 1900 to 1908, maybe 1905 or somewhere like that, because you're looking at the last wick down here. Yes, just keep an eye on it. So you always have to account for what if scenarios, and then if it starts to do it, you know exactly where it's going to go or where it's likely to go. Probability is this game that we play. It's a game of probability, isn't it? So it might go there. It's likely that it will go there. If it goes up and it's bullish, first upside target will be back up to 1900, because that's pretty much where it broke down from. When it did the initial gap fill, it went to 1901. And then consolidate, and then it dropped. And we've just had that lovely double bottom. So we may come all the way down again and retest this area, and then it might start going up. So first upside will be back to about 1900. That makes sense, doesn't it, guys? You can see 1900 is a nice magnet of a level. So if gold decides to be a bit bullish, or even put in a decent retracement, and we have this impulsive and corrective kind of movement, then 1900 is where it's going to go. Talking of impulsive and corrective, one more piece of information really interesting that you want to know this because it's important. This was an impulsive move because of the vaccine. So impulsive move, 1500 pips. They announced a vaccine. It wasn't scheduled news. It wasn't factored in. The banks didn't know anything about it. Nobody knew anything about it. Why did it go down? Because gold's a safe haven, and you hold gold. And if you're a bank or hedge fund, you're holding gold because it's we're in uncertain times. But then they say we have a vaccine, so that's seen as a good thing. The end of Corona. No more beers for you, and so it's going to drop 1500 pips, and they're taking their profit off the table. Great, good place to take profit as well, right? And so that was an impulsive move. But as with any impulsive move, you have the correction. So impulsive and corrective is what they call this. So it's gone down, it's done all that over a period of weeks and months, and then slowly it's grind all the way back up to fill where it broke from. Impulsive and corrective. So you will always see this kind of a move. So that's a nice V pivot. So any news event, whether you see it happen on a day, on a 1 hour time frame, bear in mind, whenever there's any news event, any major event, so make sure you've got a news feed. If you haven't got a news feed, you shouldn't be trading, because fundamentals is what creates these markets, what makes these things happen. The technicals are what we use to plot where these markets are likely to go to, where they're going to move to, where they're going to react to. But the fundamentals are the catalysts that kickstart proceedings. They're the ones that start the engine. They're the petrol for your car. Fundamentals are the petrol for the car. Someone's putting their hand up. Someone put their hand up. It's a weird one. Oh, Tony. Tony, you've put your hand. I didn't even know you could do that. Or are you high-fiving? Or you're just pressing buttons, aren't you? Yeah, anyway, there you go. So I just wanted to leave you with that. Really important. Impulsive, corrective. Now what it wants to do, it can do what it wants. We've broken a trend line. It could keep going down. Downside's 1860 area. If it finds some support, you know that it can go back up to 1900 and just come to rest there at the end of the week, being a Friday, and just finish up there around 1900 if it wants to do that. So, someone else is raising their hands. Why don't you just send me a message, or that's it? Yeah, I'll mute your mic. Yeah, hello.
Can I go?
Yeah, go for it.
Yeah, hi. So I think I'm loving these sessions because I'm at home full time, and just having traders around you talking, it's always a good thing.
Help keep you out of
I was
mischief. That's what we're
wondering
here
whether
for.
you could. Yeah, I'm wondering whether you could. You've been trading for 10 years plus. I'm wondering whether you could have a sort of a detailed session with regards to psychology, emotional control, discipline, etc. Because I've come to realize I've been trading almost 5 years now. It's going to be 5 years in April, but I've come to realize that part of trading is one of
Yeah, I
the
know, right?
most
It's
to get to my next step.
yeah. No, I hear you. I'll give it some thought. I thought we could. Yeah, I thought we. Well, that's why I started doing the podcasts, because I thought we could just address psychology, because it, like you said,
I've listened to all the podcasts.
it's a big one. I know it's massive. Yeah. Well, what I can do is I can go through on my hard drive on one of my computers. I've got all this psychology stuff, and what I've been trying to do, or what I am doing, is I'm just taking out the best bits, the bits that I think are good, relevant. I think, oh, that's relevant. They can use it. And what I do is, the way I do it is I listen to you. I listen to feedback. I'm observing what people are doing in these forums and the chat groups and the communities that I'm in, and whatever they're talking about that week or that's relevant there. And I think, okay, I can see a need. Then I tend to do psychology podcast based on what I saw. So consistency was a big one, and over the last few weeks, and so I thought we'd do that because people are trying to trade over Christmas because we're in lockdown. This is what I mean by being keep you out of mischief. People, because you've got nothing else to do, so you'll just end up looking at charts, and the volume might not be there, and you just end up making a real mistake and mess up. Yeah, yeah,
Are you there?
yeah,
Let me give you
yeah.
an example of one of the main issues I have.
Mhm.
And I've tried so many things. I've tried affirmations. I've tried visualization. I'm still doing it. I know that it will work with time. But one of the main issues I have is, I'm waiting for a setup. I see a setup. I know when that setup is going to be invalidated. I know the level. That's where I put my stop loss. And I see that price goes in my direction a bit, and then it goes the opposite direction, and it gets to that level. And instead of me to just either allow it to stop me out, or just close it early because I know that this setup is no
I
longer
close early.
it's no longer
Yeah,
there.
yeah. I
I
try
close
and
early,
yeah. I try and close
and
early.
then move my stop loss.
Yeah.
I keep on but then I move my stop, and then I start hoping.
Oh, so you take
I'm
your
sitting
you
there
move your
hoping, just in case the
yeah
market steps a leg.
yeah. What's that, Martin?
It's not
Yeah, I
really
move
a
my stop loss.
psychological problem. It's more of an ego issue. Really, it's we as humans want to be right.
Yeah, that's true, isn't it? It's ego, a lot of ego. But then that is a psychological. We can do something about it. People can get really gimmicky about these things and do things like self hypnosis and go and see a counsellor who does hypnosis and say, look, this is my, when people want to give up smoking or whatever. There are things that you can do, maybe not that extreme, but maybe you need to be that extreme if over a number of years it's not happening. And I'd say at the end of the day, try everything, because not just because you want to make your trading better, but just maybe try everything because that's what life's about. I think it's good to try things, see what works. Forget what someone tells you. You say, well, I've done that, I've tried that, it weren't for me, or that is for me, and just try things for yourself. That's what I do. I don't care what anyone says. I've tried so many things and done so many things, and that was me partly living my life to the fullest at the same time. And what I got from that, you will get things out of it. What you put in is what you get out. So, yeah, like Martin just said, it's an ego thing, because I've done that as well. Where I think maybe maybe I just need to widen the stop a little bit more. I could have widened the stop a little bit more on the Dow, and I wouldn't have been stopped on the first attempt. So sometimes it was the right thing to do, but widening it and just moving it out the way, and all of a sudden allowing a trade to have the potential to give you a 5% drawdown when your original trade plan said 1%. That's a whole different ball game. That's something that you just need to sort that shit out really straight away, and you need to be hard on yourself. You need to look yourself in the mirror. Look yourself in the mirror and give yourself a talking to and say, stop doing that shit. New Year's resolution. It's one of my resolutions. Write it down. My son had to do resolutions as part of his school project, and I thought this is a good idea actually. Resolutions, what I wanted to talk about. I might actually do that in a podcast. Resolutions, part of your rules. It ties into a series that I've just started doing about rules. So we could maybe talk about resolutions. So you just give me my next source for my next podcast. Because then that way it gives you some structure. You need something to refer back to, as you need something, because no one's going to govern you, like I said. So you need to be able to govern yourself. And so if you've got something written down, or you've made a conscious effort to say, okay, I'm not going to do that anymore, then you are holding yourself accountable. So you have to do that. You have to say it out loud. We're talking about it now. So you turn these ideas into reality. That's what dreams are about, right? People make their dreams happen, where they think of something and then they put it on a piece of paper. It's no longer a dream. It's like it's actually something that they're planning to do. And then when they make it happen, they've turned their dreams into a step-by-step process. The same with this. This is an aspiration, shall we call it? Part of your rules. You want to improve on things like that. That's the process. And that's the process that you use for pretty much everything in your life. You say, right, I need to do that, need to do that. If we want to learn something as a skill, we generally have a coach or a mentor or someone. In this business, we don't really have that. We have Insta scammers that we can watch them leaning up against their freshly polished Lamborghini. And that's your idea of a mentor. And he's going to show you another profit picture just before he does 0 to 60 in another story link and his other Instagram post, and it's just like, wow, I wish I could live your life. And it's comedy, it's hilarious, but it's fun as well to watch. I'll take it with a pinch of salt. But yeah, you need, these people aren't going to help you with that. You need proper mentoring. You have to do it yourself. So hopefully these sessions will help you give some guidance, and I think you'll be fine, to be fair. Tell yourself you'll be fine. It's going to go one of two ways. You're either delusional in thinking it's going to be fine and it's not, because you don't make the change. You say you will, but you don't. Or you'll make it change. You will make it happen. It might take you a week, it might take you a month, but you'll make it happen. Now that you've talked about it, we've talked about it. Just make it happen. Create a little plan, a little something, and say, right, this is what I don't want to do anymore, and this is what I do want to do. And hopefully that'll work for you. Okay. And
thank you.
yeah, no, it's good that you raised that. Actually, we'll go into that in a little bit more detail. New Year's resolutions. Is what
You
we're.
shouldn't be so hard on yourself.
Yeah, oh, that's true as well. That's true.
Because, the people that manipulate the markets are past masters at setting it up to look good.
Yeah.
And then we take the bait and we get stopped out. We're normally right. That's the funny thing. Like you said, we're normally right, We just get into the early non-data. I mean, classic example here on the 15-minute Euro-US. The way they manipulated people into going short on a nice candle here at 8:45, and then the candle following that went short. So many people have got short there, and it's just gone past them and
Yeah, look, it's pumping up now, isn't it?
all out.
Yeah, it's pumped up.
Yeah, of course it is. It's going up to like 123.20 probably. Make a
Yeah, it likes the 20 number.
says
Likes the 20 number and the 80 number.
It'll get up there. It's taken everybody out that went short.
Hmm.
They're all in trouble now, moving their stop losses.
Yeah.
You know, and eventually, yeah, sure, it will kick down in the direction they hoped. But, it's almost worked.
Do you know, to add to that and a little bit of structure, you know, to stop you from moving your stop loss and things like that, messing about with whatever instrument you're trading, get to know it. So you know your instrument, know what it is that you're trading. Pick one or two or three of them, and so you get to know what their average true range is. So you know roughly how much they do in terms of how much they move each day. And if it's moved and it's moving in your favour, I don't know, and it's maybe moved like 20, 30 pips, and you think, okay, this has still got scope to go where I need it to go. You could maybe say to yourself, okay, I'm going to allow the stop loss to be at the bottom of the move, or if you're going short, look at the daily high and say, okay, the high is about 40 pips away. So if it goes and retests that high, then I know it's going the other way. Otherwise, I'm going to put my stop there, I'm going to leave it alone, and it might faff around in that 40 pip range, but then it's going to deliver. It's going to fulfill my hypothesis. My thinking was that it was going to go short, and it has done what I said it was going to do. I had to maybe wait an extra hour or so for it to happen, but it's finally done it. And so you know then that the average true range of this, like pound dollar, maybe is about average, about 120 pips. So if it's going to move and it's already put in like 50 pips, you think conservatively it's got another 50 pips to go. Because on Wednesday I shorted it at 136.09 and it came off 136.60 off that 76.4. So it'd already moved 50 pips. So I jumped on it anyway. We pretty much sniper entered it, didn't we? And those of you that were with me were like 5 minutes into the session. I was like, oh look, I'm shorting pound dollar, and it went. I just thought this is going to drop, and it did, and it dropped. And I thought, well, this has got this much room to go at least, so I can afford to go in. But what did I do? I adjusted my risk anyway. I was a little bit more conservative with how much I risked, and I took it. So, you know, but don't forget little things like that. Go, whatever it is that you're trading, remember, you know, understand how it moves, what levels it likes, what it respects. Pound likes a 50 number. This euro dollar likes this 80 number. It's at 122.80. You've got previous structure here. Tested it, bounced off, tested it again. You know if it breaks here, then it's going to go up, and like Martin says, it could go all the way to 123.20 then for another 40 pip move. But you can see why it's paused at this 80 level, because it likes this lumber. Sometimes it's just the way it does. Historically, looking left on your charts, you see certain levels being tested and retested. And again, that just comes with experience and time, and you see it. So when you bear this stuff in mind, and like you've said that you've been training about 5 years, you will have recognised a lot of this stuff because you will have seen it over the last 5 years. And so you'll know what it's going to do and what it's capable of doing. So don't be egotistical and stubborn. Know and appreciate it's doing that. I know it's going to do that. So I'm going to react to it accordingly, and then take it from there. And that will help you as well to do the right thing.
Who's the purpose behind it?
Oh yeah, I've got to go and get it to the car. Give me a second. I'll go and get it.
I played with Jamie.
Oh yeah? Okay. All right, I'll be there. I'll be there in 1 sec. All right. That's good that you did, and I'm really happy for you. Yeah. So I'll be back in a sec. All right. I'm going to mute my mic anyway. I'm going to stick around for a little bit and just see what's going on with this US Open. But hopefully that was all good. Someone's messaging, doesn't have a mic. Sorry, don't have a mic. Had the same problem. Just raised now. Okay. Is it Afolabi? Help me using 0.5% risk rather than 1% at the beginning. That's good. I felt it easy accepting the loss. Yeah, because you're within your comfort zone in terms of how much you're risking. You set those parameters, which is good. It's important that you have that. And then what else do you go on to say? You said realising and trusting the system. Yeah, so hashtag trust the process. So if you've got a process, strategy, trade plan, etc., and it seems to be working for you, trust it. Learn to trust it. Learn to believe in what you've been back testing and what you've managed to achieve. and yeah, done. So that's really, really good. Um, and realising trusting the system works in the long run, and I will make back this loss anyway. Keeping it open will just screw up my percentage return in the end. Yeah, so that's again going back to what we talked about in the last podcast about consistency. That's what we talk about in terms of being consistent. If you're going to go with 0.5% risk, make sure you're doing 0.5% risk every time you take a trade, and set yourself a little mini challenge and say for the whole of this January month, see if you can do it consistently every single day, the same things every day. And see if, like a diet, where you say I want to go on a diet, and then 2 weeks in you give it up because you're found in the cupboard eating the cookies or the chocolate or God knows what else. You can have blowout days because we're human. Have a cheat day on a Sunday, for example, or twice a week on a Wednesday and a Sunday. That provides some structure. That's what I do. A couple of cheat days, and even on a cheat day, I don't go have a total meltdown. I might just think, okay, today I'm going to eat some chocolate or whatever. Whatever it is. So structure's key. So consistency is key. So be consistent in how you approach everything that you do. And this is what I was talking about, it spills over to your personal life as well. Because you're consistent in your personal life, you're consistent with your trading, you're just a consistent person, you're reliable, you're punctual, you're on time, you get up at the same time every day, you just generally do things kind of with almost military precision, which you do need a little bit of that into your life. And you've got your days, your down days. You look at someone like The Rock. If you want to follow someone, follow somebody like The Rock, Dwayne Johnson on Instagram. Such a likable guy, right? And just, I think he was voted the most popular guy on the internet. And just, he has his cheat days. He'll eat whatever, and he'll show the pictures of him eating his waffles loaded up with sugar and calories and God knows. But the rest of the time, he trains. So he trains, he's consistent. Then he has his weekends. With us, trading, it's a Monday to Friday job. The beautiful thing about being a retail trader, which I prefer from working in a bank or the institutions, for me, is that I can go anywhere I want in the world. I can sit my ass somewhere else, still do the same things, the same process, but I can say when I've had enough. If you work in a bank, you're giving them your life, your 12-hour shifts, your 8-hour shifts, 10-hour shifts, 14-hour shifts. Depends what's going on. You can't just say, I've made the money, I'm going now, Gov. It doesn't work that way. But with yourself, being a retail trader, the advantage is you don't have to trade on a Friday. Like now, I'm done for the day, I'm done for the week. I've finished. I wouldn't have traded today, but it was non-farm, and I thought I'd come and have a look. That's why I was here. But for me, I thought 4-day week. I've done my money this week. That's fine. 4-day week's enough, So take Friday, Saturday and Sunday off. And don't be disciplined if you don't want to be. Lounge around in your pyjamas and just watch some Netflix or movies or box sets or, I don't know, go and play your golf or do whatever. I suppose you can't really do much with the lockdown, but you know what I mean? So you have to strike that balance in your life. Apply it to when you're trading as well. Be consistent when you're trading, have laser focused precision, and then the rest of the time, do what you like. Celebrate success when you want to. Go out and have a few drinks and a nice meal, but strike the balance. Know there's a time and a place for it. Now's not the time. When you're trading, you've got to grow up, you've got to tighten up and run a tight ship and just be focused on what you're doing. It's work time. Playtime's later, and just have that attitude. And that business acumen, that everything has to be kind of positive. If you're sloppy or you're leaving things to chance, it's not going to work. Because it's a game of probability, so it will come and screw you up eventually. So batten down the hatches, as they say, and don't let anything be left to chance. And that comes with just knowing what to do and how to do it and how to set up your trade plan and strategy and everything else. But there you go. All right, great. I felt like this was a pretty positive session and covered pretty much everything and some good questions and good interactions, and hope you found this fulfilling to a certain degree. And have a lovely weekend, everyone. I'll see you Monday. We'll do another session like this on Monday. All right, guys. All the best. Thanks. Bye.
Right, goodbye, Rob.
See you, Martin. See you, George.
Yeah. Thank you, Alex.
Yeah, no worries. Take care. All the best. Bye.
Thank you, Alex. Thank you.
Yeah, no worries.